Hello and welcome to Pro Trader Strategies market commentary for Monday, October the 7th. Some of you may recognize me as the Wolfman from mainstream media, but what I'm here to teach you how to do is how to implement option strategies. I'm not here to necessarily teach you how to build an option strategy, although I do that. But I feel the most important thing is how we implement those into our portfolios. So without further ado, remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, it being a Monday, pretty much light on the economic front. We do have Fed Chair Powell speaking today, and that's a couple of Fed governors. We also get the minutes, I believe, later on this week as well. So that's going to be something to really look at to see how and who is being divisive in all of this Fed governing. And it's just a lot going on with Powell, or not necessarily Powell, a couple of the Fed governors wanting major cuts, some of them wanting to hold off. Bernard being one of them that wants a bigger cut, or Bullard, sorry, being one that wants a bigger cut. Anyway, let's move over to the overall markets. Big switch from what we saw this morning. Markets have really started to turn, and that has to do with Kudlow talking about China, and that really gave a lift to the overall markets. Dow Jones was in 103-digit negative territory, and I believe it's climbed back into positive. But we'll take a look at that here in a minute. We've got crude oil moving higher today by about 86 cents, right back to where we were talking about this market was looking to go into these mid to lower 50s. And I think that that's the sweet spot that we're going to kind of hang out at unless we really see something market moving and economic data really pushing higher. Remember, over across the pond, still in a recessionary mode. That's another thing that a lot of people are talking about with the ISM that we had here, the manufacturing sector being two months in a row looking recessionary, but we haven't seen that in the service sector. The United States being a 70% service sector economy should not really put a major dent in our economy right now. Still seeing wage growth and everything else. But this is what we were talking about with the crude oil market. We got this nice little doji right there pushing us higher. Sorry, the angle is off a little bit. That's going to make us migrate back towards the point of control here. And I believe we're going to kind of land right in between these. The mid to lower 50s is what I was talking about, $52.50-ish. So we're going to kind of, I believe, fill in some of this volume and time around that area and create a bigger node in here because there's a lack of demand overseas. There's some demand here, but we're just not seeing that massive robustness that we saw in basically 2017, maybe going into 2018. So starting to see a little bit of that demand start to slack off. Remember, crude oil isn't just gasoline that goes into our cars. There's distillates that creates polypropylene and stuff like that, which are different types of plastics as well. And we're seeing that side of the demand slow down a little bit more. Gold futures coming off again today by about $8.90, still holding on by their skin of their teeth into the 1500 handle. I think it's going to stay there because especially if we start to see some of these Fed governors talking about lowering interest rates and making easy money policy, that should weaken the dollar, which should drive gold a little bit higher. I haven't gotten out of my gold trade, still in on that for the bullish upside trend. Now, bonds coming off a little bit today after being in positive territory earlier this morning. They're off by about 18 ticks, and that's really a product of the equities moving higher. You can see VIX was a little bit higher than we are right now, almost testing the 19 handle. I think it got up as close as 1850-ish is the high. Let's just take a look at that. I think it was close to 1850, 1852, the high. That's kind of where we opened up this morning, you guys. And then when we start seeing Kudlow's remarks, the market started making a big turnaround. You can see here, Dow Jones is in positive territory. As I mentioned, it was down 100 points on the day. I don't think we're in the type of environment where we're going to see all-time highs anytime soon here in the Dow Jones. Remember, I was talking about that about a week or so ago, that I thought we were going to make a move to the upside and kind of print some all-time highs. We had some bearishness come into the market. Some of that ISM and other things really caused us to move over, went down, tested that point of control, but I don't think there's enough momentum or enough bullish mentality out there to really drive this market higher. But as you can see, now we're back into negative territory here in the Dow Jones. We've got NASDAQ unchanged on the day. Again, right there at the point of control, that is acting as a magnet for the NASDAQ. So that's where the comfort zone is. That's where the most buys and sells have happened. The most volume's been traded. The most time has been spent. So when people start seeing this 7766-ish area, let's call it, which is lining up almost perfectly with the point of control here, just slightly higher by about 30 points or so, that's going to be a comfort where we don't really feel any angst to get in or out of these trades at those levels. So we can just kind of settle down in and around that level. I don't think that's another reason why I don't think that we're going to really make a big move higher anytime really soon, unless we get some economic data that's really good to push us there, or really bad for that matter. But you will notice also with the NASDAQ and the E-mini S&Ps, they are gaining a little bit of momentum here late in the day. We'll see that show up on the 30-minute chart. But we are also seeing some resistance right here around that 2956 area, or 2950 we can call it, where we've gotten a couple of tops here. That Fibonacci, as many people have been showing that as support and resistance on TV, we are seeing that come to fruition here. It also lines up nicely with this value area high right there, which is this little line right in lockstep with that Fibonacci there. That is going to act as resistance. It's going to take a little bit of oomph to get through that, especially with the lack of any bullish news coming out anytime soon. You can see here, overnight inventory was pretty flat, maybe even considered to be short. This is where we opened up, and that's where the negative vibes started coming in. But as soon as Kudlow started talking, it was right in and around this 7 o'clock my time, which lines up with 10 o'clock Eastern. He started talking about China and not delisting some of their products from our markets, and we've got that push higher in the equities. That allowed me to get out of a lot of those trades. I actually held off going into the weekend. I talked about these trades that I was going to maybe take off on Friday. I ended up holding off just because with this move higher, we finished at the highs of the day on Friday, and that looked pretty bullish to me. So I wanted to play it out, thinking that we might even get another leg higher today to get out for slightly better than 50% of my max profit. If you guys remember, I went into the November and sold the 137 puts in there, and with those 137 puts, I sold those for about 70 cents. Bought them 74 cents and bought them back for 33 cents. So a little bit better than 50% of my max profit on those, just because I squeezed them out, got a little bit more theta decay in there from the weekend. And you can see volatility in it coming out just a little bit, ever so slightly. And then here in the SPY, I went in and I sold the November, and this was only a few days ago. The November was on 10.3. So basically sold those puts on this bounce down when we got into those lows, and only had to ride this out for a couple of days to get in into a nice winning trade here. Did the November, sold the 267 puts in there for $2 and what was it? $2. Sorry guys, $2.08. $2.08, and I bought those back for 95 cents this morning. So all of those things being equal, you can see volatility came out. Directional assumption was right. I don't think that we're going to continue to move this higher, so I wanted to get out before anything started correcting back down to the point of control, which is quite possible with the environment that we've been seeing. Just not a whole lot of directional bias going on. It just seems like people are starting to put some money where their mouth is. They're starting to add to their portfolios here. I think, as a matter of fact, the tech sector really driving higher. Nvidia and Adobe and things like that were making some nice moves. So that leads me to believe there's a bit more of a risk on trade coming into the market. So I don't want to I don't want to miss out on any upside necessarily, but I also could easily see one of these Fed governors say something crazy and the market starts rolling back over. So getting out for 50% of my max profit, especially at these times, is prudent, and that's why I ended up rolling out of those as well. So out of the TLT trade and my SPY, I still have on the gold trade, which is bullish as well. I'm going to hold on to that one. It's not quite at 50% of my max profit at this time, so we're going to wait and see on that one. All right, that's all I got for you guys. I haven't added anything because we are coming into earnings season in about the next week or so, and I don't want to put too much to work right now in that type of environment where we can start to see volatility start to expand, which is good for debit spreads or debit option strategies, but those are also going to take a little bit more time to come to fruition. So I'd rather get in some of these trades that are quick in and out, like this SPY trade, where we can take a little bit of risk, get out of those in a couple of days and make our profits and run. And I haven't seen anything on the stock side that is really conducive to that. So I'm going to hold off for right now. All right, that's all I got. Other than if you can't take that, take it easy.